Well, hello everybody. Welcome to P.B.M. Money. Well, what do you think? This is the first video we've shot with our new lighting. And I'll be honest with you, I can't see. I got lights coming at me from everywhere. So I hope it looks good. So tonight, what I want to talk about is cash value life insurance. Now, if you've been watching me for any length of time, you know that years and years ago I used to sell life insurance. Or well, I just sold insurance. And I sold mostly to seniors. And one of the things that I would do is if they had an existing whole life policy, I would look at their policy and I would contact the issuing company and ask them for the cash value of that policy. Now, why, you say? Well, let me give you just a brief thing of cash value in a life insurance policy. And this was my bread and butter right here because nobody, well, very few people know the answer to this. So let's say you have a $10,000 whole life insurance policy, and you call and you find out that the cash value is $5,000. When you die, how much does your beneficiaries receive? Most people say $15,000. Nope. They receive the $10,000. The $5,000 goes back to the insurance company. That's exactly right. But as long as you own the policy, you own right now, while you're alive, that $5,000. The question is, how do you get it? Well, that was put into whole life insurance policies to try to make it more beneficial to, pardon me, I'm going to try something here. Anyway, sorry about that. They put the cash value inside of a whole life insurance policy to make that more advantageous, and that's where a lot of this investment in insurance comes from. Now, why did they call it an investment? With air quotes. Because you can borrow up to $5,000 in our example. So whatever the cash value is, you can borrow up to that for a really low amount. And I'll give you an example when this happened. This was a big popular thing back in the 70s when the interest rates were hitting 18 to 22% for loans. People were pulling out these old insurance policies and borrowing thousands and thousands of dollars for 2, 3, 4 percentage points. Turned out to be a good thing. However, it is no investment. As an insurance agent, here's what I did. I would go to these people, and the longer you have the policy, the more cash value there is. In other words, the more payments you make, the more money you have. So an older insurance life policy would have a higher cash value. And I'll never forget this one example. And this lady never did do what I told her to do, which was silly. She was a little old lady, and she had these little whole life little coupons from way, I mean, they were really old. And the face value on each one was like $25. But the cash value on almost all of them was over $100. I mean, there was a lot of cash on the table, and I told her, I said, if you die, your heirs are only going to receive a couple $100. But if we cash this in, you're going to receive thousands of dollars, and those thousands of dollars we can put into an annuity or something so that they still get the money, but they'll get 10 times the money and you don't have to spend a penny. She wouldn't do it. I tried. So if you have a parent, grandparent, friend, or anybody who has a whole life insurance policy, the smart thing to do is to check the cash value and see if it isn't beneficial to cash that policy in, take that cash, and make an investment with it. Now, I chose annuities because that was in my repertoire. If they were younger, what I would do is so let's say in our example, I got $5,000 out. All right? I would take a percentage of that and buy them term that would equal whatever they were currently paying. Then I would take the rest of that cash and I would put it into a savings account, a stock fund, something where it will grow over time. Because for what they're spending on a whole life policy, they can buy a lot more term, assuming that they're eligible. They can buy a lot more term and get the cash value and make an investment. And it won't cost them any more money. And that's one of the tricks life insurance companies do not want you to know. Use the cash value in your life insurance policies and make better financial decisions. And that's key. Now, I would tell everybody, including my parents, to do this, because this is good finance. Insurance companies don't want you to know this, because let's say you've had that policy for 10 years, or 20 years. If you die, they get all that cash back. So in our example, they're going to pay out $10,000, but they're saving $5,000. So your $10,000 payment just only cost them $5,000. And you're still making payments to the company based on a $10,000 net amount. Yeah. So, get your whole life insurance policies, check them out, check the cash value, and see what the smart thing to do. It is very rarely a smart thing to do to leave that much cash value in a policy, continue to make payments, and not cash it in. That's all I wanted to talk about. The next video I do is going to be concerning long-term care. That's another one of the types of policies I sold to seniors. And we're going to talk about, is that a good choice or not? But for here and for now, cash value and whole life insurance policies is a racket. Stop contributing to it. Cash it in. Make good decisions. Well, you guys have a great week and happy investing.